So market makers and hedge funds were supposed to abide by new short sale transparency regulation reporting requirements. And the SEC basically made a huge mistake. These firms went running to the Securities Exchange Commission to beg them to not have to abide by these rules in Regulation Show, Rule 13F-2. And at the end of the day, the Securities Exchange Commission said, we messed up under Gary Gensler again. Now, obviously, I'm paraphrasing here, but the reality of the fact is that those firms, the market makers, the hedge funds, not all of them, right, but some of them within their and with some of their lobbyists, went ahead and told the SEC that we need 6 months more. And the SEC says, no problem, we'll give you another year. So as you can see here, this should be no surprise to most people. Currently under Commissioner Mark Ueda, who is the acting commissioner of the Securities Exchange Commission, meanwhile, Donald Trump's appointee, Paul Atkins, is currently being nominated and confirmed as the new head of the SEC. Mark Ueda and company at the SEC went ahead and said, no problem, guys, you're looking for 6 more months? We'll give you 12. That should come as a surprise to nobody, really. You can see here that the Securities and Exchange Commission provided a temporary exemption from compliance with Rule 13F-2 under the Securities Exchange Act and from reporting on Form Show. I found it extremely amusing, though, that when reading through the actual form itself, these are the key points. I'll make it quick. This has been in the works for a long time. On October 13th of 2023, the SEC adopted Rule 13F-2. So this has, of course, been in the works for, over a year and a half at this point. And it requires institutional investment managers that meet or exceed certain specified thresholds to file Form Show. And this form basically was to give the commission the ability to publish certain information regarding each equity security reported by the institutional investment managers. So as we've told you guys before, all of this short interest is self-reported by the institutions to the Securities Exchange Commission and to the other firms. The problem here is, right now, is that the effective date of Rule 13F-2 in Form Show was January 2nd of 2024. And the compliance date was January 2nd, 2025. So in the beginning of February, they were supposed to start reporting if they had more than 5% of a float of stock worth of short interest, or if they had more than a certain dollar amounts. They had to file these forms in order to maintain good standing. They sent letters and emails begging the Securities Exchange Commission to give them 6 more months. In addition, the FIF, Financial Information Forum, submitted several letters on December 16th of 24 in Form Show documents requesting an extension of the current January 2nd, 25 compliance date for Rule 13F and Form Show reporting for a reasonable period, for example, 6 months, from the date the Commission provides written guidance in response to interpretive questions raised by FIF and other participants, as well as the Alternative Investment Management Association, the AIMA, also submitted a letter requesting a 6-month extension for compliance with the rule until July 1st of 2025. And of course, it turns out that the discussion here stated, the Securities Exchange Commission, should I say, stated, the Commission agrees with the concerns expressed by commenters about requiring reporting for activity that occurs beginning on January 2nd of 2025. When the Form Show technical specs were issued only a few weeks before that date, after the Commission published December 16th, 2024 Form Show documents, commenters suggested a shorter period would be workable, for example, 6 months. The commission has determined that a temporary exemption from compliance for approximately 12 months strikes an appropriate balance between the goals reporting to provide transparency regarding certain short sale related data and industry requests. They asked for 6 months. The SEC gave them 12 months. And the SEC also said that under Gary Gensler on December 16th of 2024, when we rushed out this new reporting requirement, in order to give Gary Gensler some good headlines and to try to pad his resume before leaving the SEC, they didn't give sufficient time for these firms to actually follow the Form Show specific XML technical specifications that were issued only a few weeks prior to that date. Now, this should be very clear here. And the fact is that people need to be pointing the finger at Gary Gensler once again, specifically for trying to make himself look good and make it appear as if he's actually doing something to help retail investors and to help market transparency. He shit the bed once more. It comes as no surprise here that this is happening, because this is right up there with everything else that Gensler did in his tenure. It was all a facade. It was all lipstick on a pig, and that's all it's ever been. Ladies and gentlemen, the point of this video is to tell you that the Securities Exchange Commission, under Gensler, and possibly even going into the future, has done absolutely nothing to actually help retail investors. If you guys are tired of naked short selling, if you're tired of the abusive short selling, we have to stop thinking that the SEC is going to be able to help us. Maybe they will under Paul Atkins, who is being appointed and nominated here by Trump, who has to be confirmed in the Senate. But before anything can even happen on that sense, we can't just continue to sit around. That's why you need to look at Lit Exchange. Over 3 years ago, we began the creation of Lit Exchange, and you can find our filings on the SEC Edgar website there for Regulation C and D filings, in which you have the first chance ever in the history of the world to invest in the private equity of an upcoming stock and crypto brokerage. So far, over 300 retail investors have invested nearly $600,000 in Lit Exchange, over $500,000. And people are understanding that if we want to make these changes, we need a stock and crypto brokerage that is going to make these changes for us. Because the SEC, FINRA, they're not going to do it. Now, my hopes are high for Paul Atkins. Regardless, transparency and regulations move very slowly. So if we want to make a difference, look into a company that is going to prioritize fairness and transparency, that will automatically route orders to lit markets, that will avoid payment for order flow from price distorting dark pools, that will give you a leg up with a bleeding edge user interface with the assistance of artificial intelligence and thousands of your best friends to be able to make informed decisions. You guys have an opportunity, again, for the first time ever in the history of the world, to actually invest in an upcoming stock and crypto brokerage. As I said here before, and I've told you guys this many, many times, I remain hopeful that the new SEC under Trump will continue to drain the swamp, as they have done for the last 2.5 weeks. The man hasn't even been in office for a month and has already accomplished more for the American people and people around the world than Biden and Harris did in their entire 4 years in the presidency. But the fact remains here that we can't sit around and hope for the best. We have to make some changes of our own. Who's running the SEC right now? Mark Ueda, who was working under Biden-Harris. So, Lacey, you need to, maybe do a little bit more homework on that sense. So, yes, Dufresne says, so was Gensler protecting his buddies yet once again? Gensler basically trying to make himself look good knowing that this would get kicked back after he left the Securities Exchange Commission, knowing that there was not sufficient time for these firms to actually be able to meet these requirements, as there is a minimum standard of several months that it must be implemented with time to give these firms to actually report as they're supposed to. Now, I'm not standing up for these firms whatsoever. I'm showing you exactly how the Securities Exchange Commission, under Gary Gensler, under Biden and Harris, did absolutely nothing for retail investors. And so far, under Mark Ueda, who worked under Chair Gensler during his tenure, is currently not doing anything to help retail investors either. So, our only hope here is to look towards the future, is to make the change ourselves. And you should consider doing that by investing in Lit Exchange. And keep in mind that with a little luck, maybe Paul Atkins will help out retail investors. But I'm not going to hold my breath. So if you are ready for real change in financial markets, go to litexchange.com. The link's down in the description and in the comments. Keep It Real says, boss, can you please explain what Trump has done in specific to help the American people? My friend, all you got to do is go on social media. It's really not that hard. If you don't see it, I'm sorry, I can't help you with that. If you can't read the simple things you see on Twitter or social media and realize everything that's been done already to help out the American people, I can't help you. Doug TV, my friend, says, hey, Butcher, can you try to send them an email or something and complain about it and get my signature from everyone? I'll be honest with you, Doug, there's no point. There's no point. The SEC didn't do their fucking job under Gensler as usual, and they agreed that they fucked up. Now they got to give these firms another 6 months. But of course, instead of giving them 6 months, they gave them 12 for something that was implemented long ago. Let's take a look. Just how long ago was this implemented? Well, a really long time ago, 2007. So this is a recurring theme here. Now it says on the SEC.gov website, are short sales legal? Although the vast majority of short sales are legal, abusive short sale practices are illegal. For example, it is prohibited for any person to engage in a series of transactions in order to create actual or apparent active trading in a security or to depress the price of a security for the purpose of inducing the purchase or sale by others. Thus, short sales affected to manipulate the price of stock are prohibited. In a naked short sale, the seller does not borrow or arrange to borrow the securities in a time to make delivery to the buyer with the standard settlement period. As a result, the seller fails to deliver securities to the buyer when delivery is due, known as a fail to deliver. Now, this has happened time and time again on some stocks that you guys are very well aware of: DJT, AMC, GameStop, Silver ETF, SLV, and so on. And that is why the failures to deliver caused these firms, or should I say these stocks, to be put on the regulation show threshold securities list. And of course, they continue to say that naked short selling is not necessarily a violation of securities laws or the rules. Indeed, under certain circumstances, naked short selling contributes to market liquidity. For example, broker-dealers that make a market, also known as market makers, in a security generally stand ready to buy and sell the security on a regular and continuous basis at a publicly quoted price, even when there are no other buyers or sellers. Thus, market makers must sell a security to a buyer, or even when there are temporary shortages of that security available in the market. This may occur, for example, if there's a sudden surge in buying interest in that security, or if few investors are selling at that time. So, a market maker engaged in bona fide market making may need to sell the security short without having arranged to borrow shares. This is especially true for market makers in thinly traded illiquid stocks as there may be few shares available to purchase or borrow at a given time. In compliance with Regulation Show began January 3rd, 2005. Excuse me, not 2008, 2005. That was Dodd-Frank. Regulation Show was adopted to update short sale regulations, blah, 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 due to continued concerns about failures to deliver and promote market stability and preserve investor confidence. The Commission has amended it several times since then to eliminate certain exceptions, strengthen requirements, and reintroduce the price test restriction. However, the grandfather rule was replaced with the market maker exception. In 2008, the Commission eliminated the options market maker exception, but kept the Bernie Madoff exception. And that Bernie Madoff exception makes it so that market makers can sell your stock short by marking it short exempt. And selling a stock short by a market maker is not necessarily illegal, but when they do it on behalf of facilitating a trade for their hedge fund, it is, of course, a big problem. And you can see here under Rule 203B1 and 2, locate requirements. Regulation Show requires a broker-dealer to have reasonable grounds to believe that the security can be borrowed so that it can be delivered on the date the delivery is due before effecting short sale. This must be made and documented before effecting the short sale. But of course, that often does not happen. And Rule 203B3 requires them, the participants of a registered clearing agency must immediately purchase shares to close out failures to deliver in securities with large and persistent failures to deliver, referred to as threshold securities, if the fails to deliver persist for 13 consecutive settlement days. Threshold securities are equity securities that have an aggregate fail to deliver position for 5 consecutive settlement days at a clearing agency, totaling 10,000 shares or more, and equal to at least 0.5% of the total shares outstanding. They are included on a list disseminated by the SRO, and that is what gets them put on the threshold securities list. In order to avoid that, retail investors would be able to use Lit Exchange to have their shares routed automatically to lit markets. This would prevent the market makers the ability from trading the shares in their dark pool, manipulating orders, and front-running the orders that they receive from their market maker on via their hedge fund. And instead of receiving synthetic shares without a borrow from market makers, retail investors would be buying real shares on lit markets from other investors, whether they be institutional or retail. The fact of the matter is that no other firm is doing this. And this is the only chance that retail has to prevent the market maker from trading the orders in the dark pool, thus suppressing the price of stock. That is why about 40 months ago, we begun working on Lit Exchange, and we plan to launch in the near future once we achieve the final regulatory requirements. In the meantime, if you'd like to be a part of a once-in-a-lifetime opportunity, you can go to our website and join our founders program on the FINRA-regulated funding portal, Silicon Prairie. Like I said, so far over 300 people have invested over $500,000, and this has been done completely organically. We have not spent a penny on advertising. So once we do, we will definitely be reaching our next goal, and likely the funding portal campaign, the founders program campaign, will no longer be available. So if you're interested and you want to have a potential liquidity event when we IPO as planned in the future, go to litexchange.com, go to the FINRA regulated funding portal, go to the SEC Edgar website, and check us out on there. Rod says, another year of no reporting means unlimited manipulation in the next year. Well, my friend, it's definitely not helping in any way whatsoever. You know, I know a lot of you guys, ladies and gentlemen, are sick of the corruption, and I think a lot of people are. More people are opening up are being made aware of what's happening, and that really is important right now, because the manipulation that keeps happening here is not going to stop. It doesn't matter what regulations they put into place, especially if the fines are commonly and consistently not big enough to force these firms to stop naked shorting. So even though these short sales may be legal, it doesn't mean that a ridiculous amount of abusive short selling isn't happening. I think that's been made very clear. When you see a stock on the market whose float has been traded 1, 2, 3, 5, 10 times in a single day, especially one that is held in majority by retail investors like AMC stock, it becomes increasingly evident that the only way for that to be happening is if synthetic shares are being created by the legal naked shorting by market makers, in which they are selling stock short to facilitate a trade to retail and then failing to deliver on the back end. So keep that in mind, ladies and gentlemen. I wish you peace and wealth. Remember, these shorts, the hedge funds, the institutions, they got to work hand in hand with the Securities Exchange Commission here in order to prevent themselves from getting screwed. Will things change under Paul Atkins? I remain hopeful that there will be increased short selling requirements and real changes here in financial markets. But since the guy hasn't even been appointed yet, or should I say, hasn't even been confirmed yet in the Senate, we're kind of a long way from that. So we need to continue doing everything possible to shine a light on the corruption and actually make our own change. Because we sure as hell can't let them keep getting minuscule fines and slaps on the wrist in exchange for the cost of doing business and committing these crimes. Correct, Steve. One unit would be, many, many thousands of shares of lit exchange. Correct. And each share, he says, I'm thinking each share will be worth substantially more than $1 each. Well, my friend, I like the way you think. You seem like a very smart individual, Steve. Now you're starting to understand the beauty of investing in a private equity firm, especially an upcoming stock and crypto brokerage, which the opportunity, by the way, has never been available to retail investors under Regulation CF via the Jobs Act ever in the history of the world. But instead of going to the hedge funds, I'm here making videos like this to try to educate everybody out there so that people understand the importance of what we're doing and understand why we need your investors. So instead of going to a venture capital firm or a hedge fund firm and getting the money from them, which many other brokerages have done, should I say all other brokerages have done, I'm coming to you and pitching you with the understanding of this is what's happening in the markets. This is how we can counteract that. And this is how we can actually help retail investors in perpetuity from now on in order to actually make the change that we want to see in financial markets, because they're not going to make the change for us. Cheers, my friends. Have yourself a great rest of your day. I will see you guys again tomorrow.